The euro returned to its one-month high, driven by disappointing data on US GDP growth. The revised report showed that the US economy grew at a slower pace in the third quarter than previously believed. Gross domestic product grew by 4.9% on an annualized basis in a 3-month period from July through September, compared to a 5.2% increase reported in the previous estimate. The British pound also gained value against the US dollar, offsetting losses from UK inflation data. Today, all eyes will be on the core PCE price index, the Fed's preferred inflation gauge. The consensus estimate is for a 0.2% rise in core prices in November, while the annual core PCE inflation rate is forecast to decline to 3.4% from 3.5% in October. If data shows a stronger than expected slowdown in price pressures, the US dollar will most likely extend weakness amid increased expectations that the Fed will start cutting interest rates in the first quarter of 2024. A steep rise in core prices will revive demand for the greenback and drag riskier assets down. Traders may also take notice of US consumer spending and personal income data, which is expected to be positive. Higher consumer spending and income gains are supported to boost inflation and support the greenback. Today's macroeconomic calendar also includes US new home sales, which are forecast to rise. Furthermore, it's worth paying attention to UK GDP data. The British economy is estimated to have expanded by 0.6% in the third quarter compared to the same quarter a year ago. On a quarter-by-quarter basis, GDP is estimated to have shown no growth in the third quarter. Gloomy statistics could exaggerate recession fears in the country. Meanwhile, the Bank of England is denying signs of recession, keeping interest rates high. According to recent data, UK inflation has cooled significantly, which could contribute to stronger economic growth in the country. And now let's move on to technical analysis. According to the 1-hour Euro-American dollar chart, a rise followed by a false breakout at 1.1009 will create a sell signal, thus dragging the euro down to 1.0972. If the price forms a false breakout at this mark following weak data from the US, a buy signal will be generated and the euro will extend its bullish run. If the price breaks through 1.1009 and consolidates above this level, the European currency is expected to advance to 1.1041 and even 1.1073. At the mark of 1.1073, I recommend going short on a rebound to catch an intraday correction of 25-30 pips. Short positions at 1.1041 and 1.1009 can be considered only amid a false breakout. In a bear case scenario, if the price fixes below 1.0972 amidst data showing accelerating inflation in the US, the market will see a sell-off, with the euro diving to 1.0937 and probably 1.0909. At the level of 1.0909, it would be a wise decision to go long on a rebound, counting on an intraday correction of 25-30 pips. Going long at 1.0937, the lower boundary of the sideways range, and 1.0972 will be relevant in the event of a false breakout. Speaking of the British pound, it is currently heading for 1.2693. Its breakout amid upbeat statistics on UK GDP growth will make it possible to buy the pair in the hope of a rise to 1.2725. Moreover, sterling may reach 1.2758 in the event of data showing cooling inflation in the US. At this mark, traders are recommended to go short on a rebound to catch an intraday correction of 25-30 pips. Long positions at 1.2725 and 1.2693 can be opened only amid a false breakout following weak data on UK economic growth. In this case, the pound-dollar pair is likely to dip to 1.2657. If bulls fail to regain control of the market at this level, the British currency will extend weakness, sliding to 1.2613. At this mark, one can go long on a rebound to catch an intraday correction of 35-40 pips. Good luck and have a nice weekend.